the rate of increase decreased. Hey, it's Eric Osnes here with ericismybanker.com with my weekly update on mortgage rates for the week ending January 24th, 2024. Well, the financial markets were relieved to see PCE, the Personal Consumption Expenditures Index, come in up only 0.2% for the month of December. That's up 2.9% year over year. This weekend, you'll hear various sources misinterpreting that information, stating that prices are falling. They're not. Prices are still rising, but the rate of increase is decreasing, and we're getting closer to the Fed's goal of 2% inflation, which is a good thing for mortgage rates. Will this be enough progress on inflation for the Fed to start cutting rates this spring? The FOMC, the Federal Open Market Committee, meets next Wednesday with an announcement on rates. There's little chance they'll cut rates at that meeting, but bond traders are going to be looking for clues about whether a cut in March is still in the cards. For the week, mortgage rates are pretty much flat. Here are the national averages. Conventional 30-year fixed rate, 6.9%. That's up 0.01 from a week ago. 15-year fixed rate, 6.29%. That's up 0.12. FHA and VA 30-year fixed rates, 6.2%, up 0.06. 30-year fixed rate jumbo, 7.25, up 0.14. Moving on, house hacking is helping Gen Z and Millennials. Gen Z and Millennials are hacking the housing market as a way to solve affordability challenges brought on by high home prices and elevated interest rates. House hacking refers to renting out portions of the home for an extra stream of income. According to Zillow, 39% of first-time homebuyers found that house hacking is a very or an extremely important opportunity. The additional income from house hacking can help a buyer realize that dream of home ownership, but how does that fit into mortgage lending rules? Generally, income from roommates, we call it boarder income, cannot be counted when qualifying a borrower for a standard mortgage. So house hackers will need to qualify for their home based on their standard income. But there are first-time homebuyer programs that will allow boarder income to be used, provided that the overall income is below Fannie Mae income limits for the local counties. In King County, for example, that's $109,840 per year at present. For these programs, we can add boarder rent to your qualifying income as long as that rent is no more than 30% of the overall qualifying income, which is, pretty likely. To be eligible, though, we must show that the boarder has a history of renting from the borrower. A document like a driver's license or a bill showing the same address will do the trick, along with evidence of receiving rent for at least 9 of the past 12 months. Using boarder income is not the same thing as adding a co-borrower to a loan. The boarder's not on the mortgage. But adding a co-borrower is also an option. You don't have to be related to buy a home jointly with somebody else. Anybody can buy a home together. If you'd like to be a future house hacker, but you don't have the documentation, get on it, get busy with it, and we'll have you in your newly hacked home by spring. I'd love to help. You can reach me. Call me 206-915-3742. You can email me, eric@ericismybanker.com, or look for me on social media. Just look for Eric is my banker, and you'll find me. That's all I've got for this week. I hope you have a great weekend. Talk to you next week.